Hey guys, welcome back to my channel. This is Jason Jones, and today we're going to be talking about the coronavirus, and we're going to talk about how it's affecting the economy and what's going to happen because of this. What's going to be the long-term effects. So that's today's video. If you haven't already, hit that subscribe button. I really appreciate it. Also hit that like button. So let's get into it. So the coronavirus thus far has 350,000 cases worldwide and about 15,000 deaths. It's a pretty serious thing. A lot of the US has gone on shutdown, which has stalled the economy almost to a halt. Local businesses are struggling, specifically restaurants, local small businesses, employees of companies. A lot of companies are laying off. Companies that are well diverse and have a lot of cash on hand are actually helping and giving paid time off or having workers work from home, which is nice. But a lot of companies don't have that privilege. And they're laying off a lot. I saw an article that said we might even see 30% unemployment. That sounds crazy to me. I don't know if that's possible. If it is, I just really hope that doesn't happen, because that's a astronomical unemployment rate. And the stock market has taken a tank. The S&P 500, the Dow Jones, and the NASDAQ have all fallen over 30%. You know, we're looking at some weird times right now. I don't think anything like this has happened in the modern world. I know there was a pandemic in the early 1900s, but it doesn't correlate to today's economy. Today's economy is very digital. The stock market has a lot of AI in it, a lot of algorithms trading, which have been making the stock market more and more volatile, if you haven't noticed. I mean, let's take Boeing, for example. Boeing lost 70% of the company's value in like a month. 70% of the company's value was just shut off in a month. That's extreme volatility. A lot of people's 401ks are hurting. Baby boomers who are almost in retirement, this was like the worst time for it to happen. Everybody kind of knew we were going to head into a recession because we've been in the longest bull cycle. I don't know if it was in history, but it's one of the longest, about 11 years. And it was time for a pullback for sure, but not to this drastic level. Nobody really saw this. Some are calling it a black swan event. You know, things went pretty crazy, and it's causing a lot of issues. Word just came in that the Democrats denied the aid to families. I think it was going to be about $1,200 per family. It might have been a little bit more, a little bit less, I don't know, but it was a financial aid to families to help them in this time, because 78% of Americans are living paycheck to paycheck. Nobody, is really putting away that emergency fund money like they should, and it's hurting them a lot. I'm hoping banks are going to forgive mortgages this month, and also in the coming month if needed, and just add it to the back end of the loan. If they don't do that, we may see a lot of foreclosures, which is going to be really bad. The Fed is printing money like crazy. It's buying a bunch of government debt like bonds and treasuries. I don't know. I don't know if they're trying to quantitative ease the situation, but when the Fed prints as much money as it is right now and is putting as much money back into the economy, into the banks, and trying to stimulate things, it can cause inflation, and it can cause higher inflation than wanted. Things have to get pretty drastic to go into a hyperinflation situation like Germany did way back when, and I believe Venezuela is going through it right now. I think that's the country. I know it's a country in South America is going through a really hard time with hyperinflation. They're basically like burning money because it's worthless. So they have to be, I don't know if the US if that could ever happen, the too big to fail kind of thing, but it's possible. So the Fed needs to be really careful on how much money they're printing. I don't know. It's a very interesting time. I don't think anybody's ever seen something like this in modern times, and it's going to be interesting how it plays out. I think it's probably going to take anywhere from 3 to 5 years to recover from this. That being families, businesses, the stock market in general, You know, it's kind of crazy how just like a month time of things shutting down can cause ripple effects for years to come. So it's it could be used as a learning lesson to figure out if something like this were to happen again. Hopefully not, but if it does, we'd be better prepared. You know, it's very interesting. My thoughts are, we're probably going to see some troubling times for quite a couple years. I would just say, you know, families stay close to each other, help each other out financially if possible. It might even make sense to move in together with some people to cut down on your monthly expenses. You know, anything you can do to get through this kind of rough patch that this virus has caused. And everyone also try to stay as physically healthy as possible. If you do get the virus, make sure you take a lot of fluids. Make sure you go to the hospital if you can. And, you know, stay safe. I'd also love to hear what your thoughts are in the comment section below on what you think this is going to kind of do, what kind of ripple effects it's going to have financially, and where we're kind of going. I'd love to hear your guys' thoughts because this is a very interesting topic. And I'm not too sure how it's all going to pan out, but it's not looking very good. So that was kind of my brief summary on what I thought about this whole pandemic sort of situation. I hope it gets better. I hope it recovers a lot faster than I think it's going to. But anyways, drop a like, subscribe, leave a comment down below. I'd love to hear what you have to say and what your thoughts are. And until next time, hopefully it's on better terms. Alright guys, see ya.